All right, quick sound check. Sorry for the delay, but here we are live. Just a quick sound check and then we can get started. Patience is the road to wisdom. It sure is, isn't it? Okay, audio seems to be good on my side. Let's just start quickly with a general advice and risk warning disclaimer. Oops, it's in Indonesian. All right, let's switch this to English. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so you guys can probably tell from my voice today, a little bit energetic, a little bit happy on what's going on with the market. We finally moved out from a very flat market for nearly 2 weeks. If you count the pound USD, it's been like since December, so it's a pretty long time. All right, so let's take a look at the dollar index first, and then we'll cover the rest of the major currencies. We can talk about gold if you guys want to, and whatever else you guys want me to take a look at. All right, let's take a look at the dollar index. This one here is really crucial. Very close to creating a new high here. Very, very close. It is currently finding resistance pretty much at the January high at 105.63, so we need to bypass this level. Otherwise it could turn into a range bound market condition again. Hopefully no, we don't. I don't expect that to happen. I do expect for the dollar index to kind of progress a little bit higher, at least nudges up a little bit. 105.75, happy with 105.75. Even happier if it does break 106 on the dollar index. A couple of things to look at with regards to the dollar index. If you are monitoring the dollar index, you need to monitor the 10-year yield as well. This one here, we are kind of borderlining on the 4% rate. On the yield here, we need to bypass 4%, and we're not looking at that changes happening anytime soon. But the 2-year yield, now, if you guys, I think we talked about this before when we talk about the strategies for 2023 in terms of the inverted yield curve. That's basically the spread, the difference between the 2-year yield and the 10-year yield. 2-year yield represents short-term movement on the yields here. We're looking at the 2-year yield really gaining strong. This is way past 5%. So the gap is actually the largest gap since 1981. So the difference between 10-year yield and the 2-year yield, the spread, the difference is actually the largest difference. It's basically the largest inversion that we have seen since 1981. So this means a lot. It does mean a lot when we talk about the inverted yield curve. The inverted yield curve is actually used as a precursor for a potential recession. I think we discussed this earlier in the year. Was it in December when we talk about 2023? Not expecting a recession to happen, but it's there. It still causes a little bit of a concern. So overall, I think we are looking at a higher yield on the U.S. market. Right, and therefore we're still anticipating a little bit of a grind on the dollar index. Okay, we'll talk about sterling yen because I've been posting stuff about sterling yen as well, and we actually did touch base on the sterling yen last week as well. So I believe the sterling yen trade that's been going on, that's been a trade since last week on Wednesday, but we'll take a look at that. Anyway, back to the US dollar strength. Let's talk a little bit about the dollar strength. The testimony from Jay Powell last night, it wasn't really a surprise because everyone kind of got the prepared testimony way before it happened last night, so we already know what the FOMC's stance are, how they're actually going to be increasing their target rate for the interest rate. So that's going to happen. The question last night was whether or not the FOMC is prepared to go back to a 50 basis points hike if necessary, because February's number was, surprisingly good. Don't know if we are going to get a repeat of those numbers this week, right, with the employment numbers. But if it does, the question asked was, will the FOMC be willing to go back to increasing rates by 50 basis points? And the answer to that, it's not really a surprise. The answer to that was yes, and that's basically what's driving the US dollar. But I think that's basically what the fuel that we need to have the market break through certain range, right? So let's take a look at the Aussie USD first. This one here, bouncing off 67 cents basically since November. Bounce off that December. We finally break through below 67, and I think that's a relief. Last night, because it was so long, and if you're wondering why the trigger on that 67 or the 1.19 level on the pound USD was so significant, because a lot of the stops was lined up below this level. So just a little bit of a touch on those stop losses are going to trigger a huge move to the downside. A lot of people are going to get their positions closed out. So I was asking, how was your trade this week? Because last night, I think it goes both way. Some of us are enjoying it. Some of us are having a great time. Some of us are cheering on that break. But I think a lot of people that were holding on to their positions, holding on to support, probably got their stop losses triggered, and it's a huge, massive stop loss that was triggered. All right, so Aussie USD right now, the break pretty much takes it down to 66. So if we are looking at a normal level thing, we can take a look at 66 as a key level for the market. But if you take a look at what the market is doing right now, it is finding that level as a resistance, which is good, because I don't want the market to retrace all the way back up to 66.50, all the way back close to 67, because it kind of defeat the purpose. If the market retraces all the way back there, it'll cause us a lot more headache, because then market would be prone to going back to the range. So I think what we're looking at the market today, it's normal. And if we take a look at the momentum, we have a little bit of a pullback on price, but look at the momentum, it does pull back significantly. So we know from that I think this is kind of what we are expecting, right? In terms of whether or not the market is gonna start trending, because we were kind of positioning ourselves since the past 2 weeks when the daily time frame transition below the Ichimoku cloud. We're ready for this, right? We're anticipating that end of the rally to the upside since November. We're anticipating the end of that, and we think we have a little bit of a confirmation. It's kind of the end of that. We take a look at the stochastics on the daily time frame. It is below 20. Majority of them are crossing down, right? If you take a look at a pound USD and a euro USD later on, but let's take a look at the Aussie USD as an example first. This is what I've been waiting. I don't know if you guys been waiting for this. I've been waiting for this since last month, not this Monday, the previous week's Monday, right, when it transitioned below the Ichimoku cloud, getting ready for this, waiting for that break to happen. That break happened, so a lot of people are likely going to consider going short on the Aussie USD. What does that tell you for the intraday movement for the Aussie USD? Right now, I'm happy with where price is located. I'm happy with for as long as price doesn't exceed 66.25. If you take a look at the Kijun Sen, that's basically where it is, 66.25. So the Kijun has basically come down with price, and I think this is very interesting, because we would know there's a limit to how far the current pullback is located, and I don't want that current pullback to go above 66.25. If it goes above 66.25, then it's likely going to ruin my trading plan that I have for the Aussie USD. But for the Aussie USD, Right now, once the momentum crosses down, wherever it is, it could be at 66, right? It could be closer to 66.25. As long as it never exceeded 66.25, then I'm looking for a short on the Aussie USD. In terms of target level, it doesn't matter where your entry is. We are looking at a move towards 65 cents, and that's kind of huge. If we take a look at this one, we don't have a stop loss yet because we basically need the market to turn around, right? And then we would have our stop losses if the market turns around, right? But right now we don't have that yet, so I'm anticipating a little bit more of a crossover on a cross under for the stochastics. I want it to cross under, and then definitely looking for a short on the Aussie USD. You guys thinking, all right, should I wait or can I go short right now? If you guys want to go short right now, by all means, feel free. If you want to go short right now, make sure your stop losses, if you want to go short right now, would be at about 66. It would be at about 66.50 if you are attempting to go short right now. That would give you about 50 pips of risk in the market. I would wait for the stochastics to turn around, right? Or whatever you want to use. I'm using stochastics. You guys want to use MACD. You guys want to use RSI. Whatever you can use to measure momentum in the market. I'm looking for that sell-off to continue. And target wise 65, it still makes sense because if you take a look at the Aussie USD here, and if we measure the whole run to the upside since December, 65 is basically where 127.2% is located. Do you want to go for 161.8%? Feel free. That 161.8% is also located at 63, so the levels match, right? It kind of match with what the Aussie USD is typically behaving. Pretty much every half a cent. We're looking at 65, we're looking at 64, we're looking at 63. Feel free. There's a lot of options, right? Swing traders. You guys been sidelined for a while. This is I think this is a good chance to jump back into the current move to the downside for the Aussie USD. All right, so that's the Aussie USD, and sorry, it's pretty much the same across the board. Maybe the Euro USD is slightly unique on the Euro USD. Because the Euro USD basically, if I zoom out a little bit, you guys can see there's actually a slight hidden bullish divergence. This needs a move to 1.05 to be negated. So once price reaches 1.05, then we would ignore this, and then we would expect price to drop down a little bit lower towards the 127.2%. That's located about 1.0350, 1.0330. So we'll round it out. We're looking at a move towards 1.0350 once price breaks below 1.05, and then it goes all the way down. It goes all the way down to 1.0150. So you got a lot of options for the Euro USD: 1.0350, 1.0250, 1.02, 1.0150, right? So that's the general outlook on the Euro USD. Euro USD, the movement last night, it was a breakthrough movement, at least for me, because we finally break below the Ichimoku cloud. So we were kind of just dragging along the Ichimoku cloud. We finally have that break last night. So I think I like this. It's awesome, right? Hypes me up a little bit, lift me up a little bit. At least I'm looking at the market and I'm excited for the market because it's finally moving, right? There's a lot of opportunity. There was a lot of setups on the Euro USD. Some of you could have been shorting it from very close to 1.07. We were anticipating a little bit of a rejection, 1.07. Got that. Price breaks below 1.0660. That could be another entry for you. You missed that entry. You still got 1.06. Right now, what are we anticipating for the Euro USD? For the Euro USD, you might want to wait a little bit, right? Unlike the Aussie USD and the Pound USD, the stochastics is not quite up there yet. So we've got the GDP growth number from the Eurozone right now, just now. It wasn't really much of a help, right? The GDP growth, quarterly GDP growth number dropped from 0.4% to 0% growth. The year-on-year growth dropped from 2.4 to 1.8%. This is below the consensus of 1.9%, so it's not really helping out with the Euro USD. So what should we do with the Euro USD? Can we attempt to go short on the Euro USD? I think by all means, if we take a look at the Euro USD right now, if we are looking at this from the hourly perspective, then you got a few options. All right, you can wait for a break below 1.0525 as long as price never get through 1.0550. So you're kind of trapped within this range, and then some of you on a small time frame will be looking at this small trend line. You can look at that as a potential breakout, but in either way, we are looking at a move closer towards 1.05. So the move for the Euro USD is not quite done yet. We're still waiting for that move towards 1.05. The problem with that, unlike the Aussie USD, where we can happily look at the range, that's a huge target, 100 pips target. For the Euro USD, this one here, at least intraday wise, you're still kind of limited, because if you take a look at it, it looks like it's a huge distance, but it's not. It's only about 37 pips, right? So if you're attempting to go short on the Euro USD, or if you have a short position on the Euro USD, I would say hold it, right? Hold your Euro USD, move your stop losses to maybe 1.0575, 1.06, whatever, right? Let it run to 1.05. I think there's still that possibility for this one to go towards 1.05. It's just that I'm not looking at any divergences on the hourly time frame. This one here is a little bit stubborn, right? If you're thinking of going short on the Euro USD, you got a couple of options. You could maybe go in. I wouldn't say go in right now, but if you want to go in right now, make sure your stop losses are above 1.0550, right? If you want to wait for that break below 1.0525, then you can do that. Either way, you're still gonna get about 1-to-1 risk reward ratio at the very least. So you about 24-24, or if you want to jump in right now, you get 14-34. It's really not that huge of a deal, but that's the case with the Euro USD. However, if this manages to go all the way down to 1.05 and price manages to go lower than 1.0490, this is going to trigger that run like yesterday, because there's still a lot of people positioning their stop losses below 1.05, right? If that happened, this is going to trigger a very sharp, very quick drop, potentially towards 1.0350 as well. So it is a possibility on the Euro USD. So Euro USD, you got a couple of options. You can go in short right now, have a small stop loss, but at a risk of market not really deciding whether the correction or the pullback is done, because we don't have any confirmation on the momentum. Or if you want, maybe you want to have a sell order below 1.0490. Only in certain cases, I would say, create an order if you want to create a pending order. Like in the case of the Euro USD, if you do that on 1.0490, once it slides and you get filled, then yeah, you'll be in for the ride. Or you can wait for a confirmation on a close below 1.05, but on a case like this, you're probably going to miss out on that trade. So you got a couple of options on how to trade the Euro USD. So Euro USD might be a little bit unique. It's not going to be the same as the Aussie USD or the Pound USD, right? But yeah, Euro USD, you really want to focus on 1.05. I would say in cases like this, I would have an order either at 1.0490 or 1.0480. Once that gets triggered, then if you get filled, then great. I'm just not sure what the spread is going to be. How is it going to happen, right? For today, we still have the ADP numbers. I'm not really too keen on the ADP numbers. ADP numbers coming out in 45 minutes. I don't think it matters much. I'll be honest. Past experience, ADP really has limited relevance. And in terms of the focus for the market, I think market is going to be more focused on the job opening number. This is like a tongue twister. Jobs opening number. That's coming out in 2.5 hours at the same time as the Jay Powell testimony to the housing committee tonight. So there's still another testimony session to the housing committee. Last night was to the Senate banking committee, I believe. Yep. Okay. So Euro USD, interesting take on a Euro USD. Use that information however you want. Feel free to trade according to how you want to trade on a Euro USD. For me personally, I would be waiting for that run below 1.05. Okay, because I'm not too keen on picking up 24, 25, 34 pips. I'm really keen on the much bigger move for the Euro USD. All right, Pound USD is up next. So with the Pound USD, this one here got adjusted a little bit. All right, we have a new zero. Right, so we got 23.6%. If you take a look at how far this one could retrace up, logically we are looking at 1.1925. I'm not anticipating a correction towards 1.1925. I'll be honest with you, right? 1.1875, yeah, still okay. But if you take a look at this one here, on the Pound USD, I think we have a little bit of a resistance, 1.1850. Right. I'm very happy that this one doesn't go above 1.1850. I'm happy if it doesn't go above 1.1875. My tolerance level would really be limited to about 1.19. Not really anticipating a move towards 1.1925. I'll be honest with you. From a technical standpoint, it is the correct way to look at it because we need to test our previous support turn resistance, right, before any confirmed longer term move is going to happen. Are we going to get that intraday wise? Probably not. Are we going to return to 1.1925? Hopefully not, right? So let's take a look at a Pound USD on the daily time frame. This is the Pound USD on the daily time frame. Huge run. Very happy with it. Right now, next support that's available on the daily time frame is going to be located at 1.17. That's still a huge distance from where we are right now. 100 to 127.2 is roughly about 160 pips, right? It's huge. It's really huge. But yeah, I'm anticipating a little bit more of a move lower on the Pound USD. Right now, I'm very content with 1.17 as your potential target level. So we got a couple of scenarios. Ideally, I want to see that break below 1.18. But if we get a rejection, maybe at 1.1850 to about 1.1875. Let me adjust this box here. You guys are wondering what this box is. We're looking for that support this morning, but this one here, happy to go with that range as long as price doesn't go any higher than that. I'm open for an opportunity for a short on the Pound USD. Just waiting for the momentum to turn around. The momentum is not quite done yet, so it might be a little bit too premature if you want to jump in to go in short on the assumption that 1.1850 holds. 1.1850 might not necessarily hold as a resistance, so I'll wait for that shift in momentum to happen. I'm not really, trying to just randomly open a position. I've waited for 2 weeks for the market to move. I'm happy to wait a little bit longer for another re-entry into the market. So don't rush the Pound USD. Let this one do what it wants to do. Okay. Do we anticipate a little bit of a potential breakout and stuff like that? Yeah, you can wait for that 1.18. I don't think there's a lot of stops lined up at 1.18, so you're not going to be looking at the same strategy as the Euro USD. You will need to monitor the momentum to turn around. Right now, we're anticipating 1.1850 to 1.1875 as a potential resistance level for the Pound USD. But yeah, I mean, if it does goes about 1.1875, then stop thinking about going short. Let it correct itself, maybe all the way up to 1.1925 if it needs to, because that was the support level that was kind of significant. But I'm happy with the current look on the Pound USD. Just waiting for the momentum to turn around really, and then happy to go in short again. So I think the theme would be whatever we have been anticipating for the past 2 weeks that trend transition happening on the daily time frame. We don't want to go against the trend. We just want to go with the trend, especially at the early stages where it's starting to break out of that range. I think there's still that momentum there, and market is worried. Right, the consensus for the FOMC hiking by 50 basis points for the month of March, which is on the 22nd, it jumped up. Right, it jumped up from 30% to 68% to about 70% of a potential 50 basis points hike. People are 70% of the consensus is actually anticipating a 50 basis points hike. I'm still on that 25 basis points camp. I'm just happy whatever the market thinks. I'll take it. I'll go with it. We just need to adjust accordingly. Okay. So pound USD, pretty clear on the pound USD. This one here, don't rush this. Either we have that confirmed close below 1.18, or we have that rejection and then the stochastics turnaround on the pound USD. Then I want to go short again. Now, I'm not looking for a buy. If you're looking at a buy on the pound USD, even if you want to trade for that correction, you might look at it and say, hey, it's not a bad move. It's still about 70 pips. It's just not worth the risk at all. I would, if it does go beyond 1.1875, I would let it correct itself. No big rush on the pound USD. All right, the dollar Japanese yen. Likewise with the dollar Japanese yen, be a little bit more careful on the dollar Japanese yen. Let me give you a view on the dollar Japanese yen. So the dollar Japanese yen, as anticipated, we have that rejection currently at 138. So 138 is actually the key resistance. It wasn't 137. 137 was just kind of like, yeah, there's a little bit of a barrier, 137. But, I've always said, and I mentioned this again on the Outlook this week, it was 138 that was actually the key resistance to watch out for. And that's basically what the market has been looking at today. So it moved close to 138. Ran out of steam. It's kind of correcting itself right now a little bit, and we want to go with this correction. This one has surpassed 23.6%. Do I anticipate a little bit more of a move lower? Yes. This one here, it's actually a range, right? I cannot pinpoint exactly where it's actually going to potentially reverse, but I'm looking at 136.75, which is the 50%. And also the 137. I'm more on the 137 level, because if you take a look at the 137 level, let me just adjust this to 137. You guys, you'll get it once I show you 137. Okay. So 137 was basically the cap. The next one would be at 136.75, which is at about the 50% level. Both of this, it's important. They're both equally important, because if we take a look at the progress to the upside, the progress to break 137, both of them acted as a peak for a cycle, right? Both 137 and 136.75. Therefore, if we want to look at a potential bounce for the dollar Japanese yen, this one here is actually a little bit easier to read. So I'm just going to break it down to you. 136.75, 137, both levels are equally important in terms of how far down it can go. I'm happy to see any bounces from 137. I'm happy to see bounces from 136.75 on one condition. We are done with the stochastics. I need the stochastics to cross over. And that's basically where we want to go long again on the dollar Japanese yen, right? So the theme is simple. I am pro stronger dollar until, wait for it, until something negative popped out for the employment numbers, right? So if you're trading and you hyped up like super pumped up like this, and just be a little bit more cautious. If it moves, it moves. If you need to get out on NFP, get out, come back again on Monday, right? If you want to stay for the NFP numbers, just make sure you lock in your profits or adjust your stop losses accordingly. So there was a question just now at the beginning, should we get greedy, right? Is it time to get greedy right now, or should we be a little bit more cautious, or should we wait for the CPI numbers? Should we wait for the NFP numbers? I would say I'm done with waiting. I'm quite done with waiting for the past 2 weeks. From a technical standpoint, I'm very happy with the current movement, right? Do we wait for the NFP numbers? I would consider the NFP numbers. I would consider the unemployment numbers a little bit more important, right? Do I consider the CPI numbers? Yes, of course, we consider the CPI numbers. If there's a surprise to the upside, inflation doesn't go down or inflation is flat, then yeah, the Fed needs to hike by 50 basis points, which is good, right? But the theme is, from a technical standpoint, from the perspective of a technical analyst, we are looking at a potentially stronger dollar, and that momentum is likely still going to continue. This is pretty much confirmed through looking at all the major currencies. All four major currencies that we have: the Aussie USD, the Euro USD, the Pound USD, the Dollar Japanese Yen. I'm not sure about the Dollar Swiss and the Dollar Canadian, but I'll take a look at these four really closely. And that trend transition happens, right? This is the same thing that we observed back in October, November, when price was transitioning. Was there a lot of headache back then? Yeah, there was a lot of headaches. But yeah, it is what it is. The dollar index is up. The yield is up. 2-year yield is up. 10-year yield is up. You know, everything else looks good. So I'm not going to attempt to go short the Dollar Japanese Yen. You guys might think, oh yeah, but it's not bad of a pullback. You know, it was like very close to maybe 1 yen pullback, 100 pips pullback, that kind of pullback. It's okay. Look, it doesn't really matter. My focus is that I don't really want to go against the underlying trend at the current rate, because we just had that breakthrough. So drill this in. If you're thinking of trading the pullbacks, you do so carrying a lot more exposure to the market, okay? Because it's, as I always say, it's easier for the market to be spooked and price to fall down than for price to recover, okay? All right, so that's the dollar index, that's the currency majors. Let me go through the questions. I've been yapping about for half an hour, so let's take a look at some of the questions. All right. Hello, hello, hello. What's my view on the sterling yen? I go into the sell position at 163 area, my take profit at 162. All right, let's talk sterling yen, because we have that position on sterling yen. This was exactly 1 week. It's been a running trade for a week. Stop loss never got hit, and the price never got 164. For sterling yen, all I can say is this. We got that pullback to 163. I'm happy with that. So there was talk about this in the morning as well in the Telegram channel, as well as Discord. But anyway, this anticipating a little bit of a pullback. Some of you guys want to re-enter. I said it was okay if you have your stop loss 163.50. In terms of target level, you can go for 162 if you want to. But why stop there? Why not go a little bit lower towards 161.50? Right, so you basically have two running trades right now. This one here from last week, that's your stop loss is currently at break even, which is at about 163.50. So these are the current running trades on the sterling yen. So if you're thinking, should you go long, should you go short right now, you feel free to go short right now if you want to. You can actually go short right now because it's currently below 162.50. Have your stop loss at 163. So you actually have this is so much fun, right? You want to go in short right now, feel free to go in short right now. Just have your stop losses at 163, slightly higher than 163. So what, we got 3 positions on the sterling yen. Completely up to you if you want to add in your position on the third one, but I think some of you probably loaded in around 163 if you get the note this morning. All right, if you guys are still holding a position from last week, time to move that to break even. Do you guys want to scale out? You should have been scaling out at 162.50 last night. If you want to scale out right now, it's not a little bit too late. It is still at 162.50. I think that's a level to scale out if you guys don't want to add more position. But I think a lot of you are probably thinking we want to scale in, we don't want to scale out. So feel free to do what you want to do with sterling yen. You got a couple of stop losses choices if you want to. Obviously 163.50 is going to be the safest stop losses, but if you don't want to risk that big of a deal, because it is huge, we're looking at about 100 pips of range, right? Could go for a little bit lower, maybe at 163 as your potential stop losses. It's still going to be 50 pips, but hey, we're looking at 100 pips gain, 150 pips gain. This one here, the first one, it's 169. Add all that in, it does add up. You're looking at a pretty progressive trade on sterling yen. So sterling yen for me, I would go for a short on the sterling yen. I know there are concerned, but you just say dollar yen is gonna go strong, right? Let's and I'll keep mentioning this, but always look at yen crosses separately from dollar crosses, right? Dollar pairs, yen crosses, always consider yen crosses as completely separate things. They're not positively correlated, they're not negatively correlated. In fact, there's near zero correlation on yen crosses and dollar pairs. Okay? Because if you think about it, why does the dollar yen move? It's not the yen that's gonna get weaker. It's actually not the Japanese yen that's weaker. It's the dollar that's gaining strength. Now, if we take a look at the sterling yen, we're anticipating a little bit of a sell-off on the sterling itself. So we're looking at sterling weakness. We're not looking at yen weakness or yen strength. The yen is actually flat. It is actually pretty well propped up. If you take a look at if I can take out one chart, unfortunately I just don't have that capability right now without a trading terminal. But if you take a look at the Japanese yen, it is flat, right? It's actually probably range bound. It's probably propped up by a lot of things because it's weak against the dollar, but the dollar is pushing the pound and the euro lower. That props up the Japanese yen a little bit, so it's kind of like sandwiched there. Okay, so don't worry too much. Don't look at them and then say like, hey, you're looking at dollar yen, so I anticipate sterling yen to go up as well. That's not going to be the case for the sterling yen. Take a look at the sterling yen on the daily time frame. This one here, there's still a lot more room to go. So we're not quite done with the sterling yen. You know why? Because if we take a look at the movement on the sterling yen, we are still anticipating the daily to correct itself to 61.8%. Are we countering a trend? We're not countering a trend. There's no trend on the sterling yen. So we are actually trading within that bigger pullbacks on the sterling yen. We're still anticipating a pullback towards 161, 160.25. Target levels for this one here limited to 161.50. You can go for that 160.50 at 161.8 if you want to, right? Feel free, but you're not happy with what we have right now, we can always adjust the stop loss later on. That's my view on sterling yen. Very happy to just add in on the sterling yen. Alright, help me new traders. Problem is coming when I place a trade Octa FX meta trade for you mean meta trader 4? Rinze, he keep asking me about the schedule. We are still looking for that schedule, hopefully soon. All right. Do we have that on the 15th of March? I don't think I'm brief on the 15th of March webinar. All right, anyways, when it happens, it happens. Bitcoin and Nasdaq, gold, dollar Swiss for short. Dollar Swiss for short? Wait, let's take a look at the currencies first. Dollar Swiss for short? Definitely not. right? Really don't want to go against the trend. I do not want to short anything dollar at this point in time. It just doesn't make sense. Take a look at the dollar Swiss here. This one transition above the Ichimoku cloud. So now I'm not gonna go short dollar Swiss, and I don't think it's a great idea going short a market that rallied that high. Going against the dollar strength at this point in time just doesn't click. All right. That's not Bitcoin. Bitcoin's pretty stable at 22,000. Did it break below 22,000? I think it does. Is it below 78.6? I think it does. In terms of Bitcoin, can it go lower? Maybe, yes. 21,500, as I mentioned. I think we discussed this on the outlook as well. 21,500, if we lose 22,000, that would be the next available support level. Below 21,500 would be 20,500 and then 20,000 obviously, but you're still going to be looking at 21,500, 2,500. It's not really time to buy in on Bitcoin as of yet. Gold, yes. Let's take a look at gold. Happy with gold. Gold transition back below the Ichimoku cloud. Momentum is going to tick off again. Look, as I say with gold, it's not really a hard thing to figure things out with gold. Once the Fed gets hawkish, and it's not a matter of them getting hawkish. Let me just, this is quite funny, because I don't know if you were here last week. I don't know if you were here the week before that. I don't know if you're here about a month ago. And I keep repeating this every week. For as long as the FOMC is hiking interest rate, doing monetary tightening, gold is not attractive. It's kind of final. That's from a fundamentals standpoint. Unless World War III breaks out, I don't think we're looking at any significant support for gold from a fundamental perspective. And we were waiting for that sell-off to happen. Gradual pullback towards 1860. We're moving back down again. Gold, this is nothing, right? For gold, this is quite nothing. Once price touches 1795, that's where it's actually going to get interesting, because you are going to see an automatic crash on gold. All right, I think a lot of people are still lining up their stop losses at 1800, 1795. But once we break below 1795 or even touches 1795, you're actually going to see gold slide down significantly. So from a daily perspective, I'm still pro for a longer term position on short gold, right? If you're looking at it from an intraday perspective, it doesn't really change much, right? We're looking at a little bit of a turnaround, but that turnaround is also limited, like the Euro USD, the Pound USD, the Aussie USD. You want to go with FIB counts, you're still going to be limited at 23.6%, potentially 38.2%. It's not that much of a difference, but can it pull back higher? Yeah, I think we could pull back 23.6, or we can potentially go 38.2%. But ultimately, not really looking for any long-term long position. And should you go long intraday wise? I would say no, because at any given moment, once the stochastic turns around, it's bye-bye for gold. It's straight down to 1800. So if you're thinking of gold, I would consider a short position targeting 1800, maybe 1795 if you want to. Right, it's huge. You're looking at about $25, $20. In terms of stop losses, unfortunately, you're not going to get anything right now because we cannot confirm a stop loss. So you would need to have your stop loss maybe beyond 1825, which is about there, right? It's too early to jump in because you might get a better price at 23.6. You might get a better price at 38.2%. Or you might get a break below that 1809 level and then price continues to go down. You got a couple of options, but I would say you need a momentum indicator, and that's basically a given on the Aussie USD, Euro USD, Pound USD, Dollar Japanese yen, whatever you want to look at. You're looking at a re-entry into the current underlying trend, which for gold has transitioned to the downside. So yeah, gold traders, you need to be a little bit more cautious around 1800, 1795. Don't think that 1800 was the support, and it could be a support. The current situation doesn't call that for a support. It could actually be a potential breakout point this week for gold, right? So don't, gold scalpers, I know you like to do this. You look at support, you jump in there, you buy 1800. You could be in for a lot of pain if price manages to dip down below 1800, because it could slide really, really quickly. All right, so the 15th of March, it's not me. It's an email course. It's not me. All right, we got Euro USD. We got Euro USD pat down just now. So if you want to jump in and review on that, let me go through the questions first, because we're running out of time. So we need to go in a little bit quicker and cover a lot of stuff. Am I going to share analysis on gold? I just did, Def. Yeah, the thing with this, you might be new, Dev, but you know, obviously there's some stuff that I need to talk about, right? And then we can go step by step. Typically with gold, I leave it depending on whether or not there's a lot of spam going on the chat. Sometimes I leave gold for later. Do I trade gold? Do I trade currencies? I don't like trading gold, I'll be honest. And I'll answer this, because I trade all the other currencies. I trade oil, right? Gold, something I just don't like. Maybe it's my own personal experience back in 2012 when gold was really way high up and then it crashes, right? So I just don't like that. Take a look at another market like stock and crypto. It seems like it has more effect on the currency market. Can we assume that stock market and crypto will not make another deeper correction like in a few months ago? Let's take a look at the stock market. And I've been saying it's not cheap enough. Some people might look at it and say it's cheap. It's not that attractive, right? It could go more, it could go down a little bit more for the stock market. If we take a look at the stock market on the Nasdaq 100, we're not looking at any transition in the trend. The trend is still there. It's still, solidly there. If we take a look at the Nasdaq 100, this is where you guys are going to have a different view on the stock market and the currency market, because they don't move the same way, right? Can we anticipate a move lower for the Nasdaq? Yeah, if we do break below the current low, we break below 12,100, then yeah, I think we might see a move towards 12,000. Could that happen? Testimony tonight. If Powell keeps saying like, I don't really quite care what's going on in the world, and I just want to hike interest rate just to maintain inflation. If he does say that again, I think we might see another run to the downside for the Nasdaq. But does that mean the Nasdaq is in a downtrend? It's not. Technically, it's not. Technically, it's still in an uptrend. Take a look at this one here. It still creates a higher high. It creates a lower low. It creates a higher low. So we can't actually classify the stock market as equal to the currency market. At least not on Nasdaq. Nasdaq is a little bit different, right? Take a look at Nasdaq. It is different. The US 30, this one here, take a look at this one. This one is actually pretty flat. We take a look at this one and say, hey, it's below the Ichimoku cloud. Yeah, but it's not that big of a deal, because the overall tone for this one here, the Ichimoku cloud, is actually really flat. And we're still pivoting around 33,000. And as long as, if I were to go zoom out a little bit, right? Show you the weekly chart. It's not very cheap. Can it go a little bit lower? Yes. What's the cheap price for the US 30? What's the logical level? If we take a look at where the Kijun Sen is, that's where you're gonna find equilibrium in the market. That's actually post at 131. Sorry, it's at 31,762. So you're looking at about 31,500, 32,000 before a lot of traders are gonna say, hey, it's cheap. let's buy that, right? We're not looking at that yet. So the US 30, can it go a little bit lower today? Yeah, I mean, the overall tone in the market is that it's a risk-off market, so anything goes. For that, once we break certain levels, 32,800 probably not that level. Let me just give you the fib. Probably on the daily, this would actually be that fib, right? We're below 61.8%. Do we have support? Yeah, we got 32,720. That's around 78.6%. Can it go lower? Yeah, we're looking at a situation very close to what the Euro USD is, but in a different context. They're not positioned the same way. Okay, so do I anticipate a crazy run to the downside like last night on the US 30? Potentially. That was a huge drop last night. But this is nothing, because last year there was a move of about 900 points. Was that the first time Fed starts hiking interest rate? If I think that was that, or was that a surprise CPI numbers? I'm not sure, but that was a 900 points move. So this we haven't seen nothing. Can it go lower? Yeah, it could go lower. Can it go to 32,500? Yeah, it could potentially go 32,500 if price doesn't go above 33,000. Okay, so for the US 30, if you're monitoring the stock indices, 33,000 would be your resistance. If price doesn't go above 33,000, then do we anticipate a little bit more of a sell-off to continue in the market? Yes, 32,700, 32,500 on the US 30. All right. Euro pound, why not? Why not? Euro pound. I'm looking at, I think, let me just confirm that on the daily. But yeah, on the daily, on the euro pound, it is a little bit flat, right? So we're not really looking at it. Oh, wow, it's a crazy trending market or whatever. Not. It's not. It's still a choppy market until we break above 90 on the euro pound. But if you take a look on the hourly time frame, what do we see right now? We have a lower low, a high low on price. We've got a lower low on the stochastics. So technically, this could be a hidden bullish divergence. Is there a resistance? Is there a barrier at the top? 89.25 is going to be a barrier for euro pound. So if you want to trade, you're looking at a potential ascending triangle on the euro pound. So happy to go on a break above 89.25. If you want to go in right now, feel free. Just have your stop loss below 89. I'm not trading I don't trade the euro pound by all means. But yeah, if you want to do this, just make sure your stop losses are at least about 10 pips below 89, because you're not really giving a lot of room to the market. You can have it at 88.75 if you want to. You can then go for 89.50. That's still going to give you a good risk reward ratio. So only trade the euro pound if you know what you're doing. I don't trade the euro pound. I look at the euro pound just for reference sake, right? Just for currency triangulation. I look at the euro pound to know if the euro USD or the pound USD is stronger. At this current rate, I think the euro is stronger because the ECB is still going to be hiking rates. They're going to be hiking 50 basis points. What does the Bank of England do? The Bank of England wants to cut off. They want to take a little bit of a break. Bailey wants to take a pause. He doesn't like hiking rates continuously. Maybe one more 25 basis points, and then they'll take a little bit of a break. So Lagarde on the other side, she wants to hike rates. She wants to do 50. Wants to do 50 next May. Whatever it is, right? But if you take a look at the monetary policy differentials, then we've got a hawkish ECB, we've got a slightly dovish Bank of England. So how's that going to pose for the euro? The euro is definitely going to be stronger than the sterling, and that's going to be the case going forward. Because if we take a look at the pound USD, we have that drop. We have that significant drop below 1.2. On the euro USD, 1.05 still stands, right? From a technical standpoint, hidden bullish divergence still stands for as long as price is still above 1.05. Okay? All right, which market is this? King's Path FX Academy. Man, you run your own FX Academy, you would know what market is this. All right, cool. Okay, we started a little bit late just now, but I think that's pretty much sums it up, right? Really sums it up for what the game plan is going forward for this week, potentially leading up to next week. For tonight, ADP numbers coming out very soon, right? I don't think it's really much of a huge impact. Even if it does impact the market, it will be a short-term volatility rather than a persistent long-term trend view on the market. So just keep that in mind. If you want to focus on something tonight, it would be the JOLTS job openings numbers. That's coming out in 2 hours time, and then you want to go with the Powell testimony if you want to listen in again. Should be about the same thing as last night, so unless there's something else he didn't say last night, still anticipating about the same tone. Selling yen, we already did selling yen. There you go, you got selling yen there. You got 1, 2, 3 positions on the selling yen. So we start this an hour ago. So if you just jump in on the webinar, I think just once this session is ended, rewind it, right? Rewatched it. No harm done. You're gonna rewatch it again. A lot of people rewatch it, but feel free to review the session again. But we already talked about the selling yen. All right. Okay, so I think we can wrap it up for tonight. As always, good luck with your trades. It's been a wonderful day. We are finally out of a flat market. I think you should be excited about the current condition in the market. It's actually not that difficult to read. A sideways market condition, it's a lot harder to read and identify with a lot of the patterns. Either that or my strategies are just not well suited for a sideways market condition. All right. Have a great evening, everyone. Have a great day ahead, depending on where you are. Stay safe. Good luck with your trades, and I'll see you next week.